Webster, good to have you here with us.
Thank you, Alex. How are you?
Good. You've got the floor. Break down your intel on the 1,000-point plunge and what's happening right now globally.
First of all, on the 1,000 points in 10 minutes on Thursday afternoon, you got to realize that a panic was already there. You had a pre-existing panic, meaning that you had a lot of people dumping assets. And in particular, it's likely that some of the hedge funds, some of the hyenas in this hedge fund wolf pack that attacks Greece and others, there are some hedge funds who bet wrong, and they were very likely dumping assets, panic, distressed sales of assets into an already panicked market. Now, it's made worse by the fact that you've got these new things, at least relatively new. Program trading has been around for 10 or 20 years, but now you've got high-frequency trading and flash trading, and these are computer trading programs that go thousands of times a second, even more than that. So you've got somebody dumping assets, and then as this panic is building, you're getting what you already had in 1929. This part is not new. You've got a lot of people who have put in stop-loss orders, and the stop-loss orders say, if the stock goes to X, then sell my shares at X. So as you start going through those stop-loss orders, you get a cascading, snowballing effect as it goes down. So you go down to 10,000, to 9,900, to 9,800, and wherever it ended up. Then, of course, the plunge protection team comes in. This is the most obvious thing in the world. The PPT, the President's Working Group on Financial Markets, and the way they do it usually is through futures in Chicago, where they buy the futures to updraft the market, right? They keep the price of the future in Chicago above the price of the stock in New York so that the program traders will then sell the future, buy the stock, and then with a couple of $100 million in Chicago, you can generate billions and billions of buying in New York. So that's what brought it back, if you will. The artificial part of this is the recovery, and I'm quite sure that within a week or two we will get down to the same level that we just saw, because that's what you see when you've got a panicked market, right? It may go down to a certain level, then bounce up halfway, but then it'll be down there again quite soon. So that's a world panic, and I think that's what people should see. This is the second wave of the world economic depression. This is not a business cycle. This is not a recession. This is a breakdown crisis.
By the way, I mean, you've written a book on this many years ago. Over 2 years ago, you predicted that it would start in Greece, go to Portugal, Spain. You're not here whistling Dixie. I mean, I want to just point out Webster Tarpley is one of our chief economic advisors. You know exactly what you're talking about with the bona fides. What you've said has come true because you understand the technical facts at a deep level.
Yeah, thank you very much. It's a world economic depression and a disintegration. Now, the disintegration is this. We already had the disintegration of some banks, but now you're going to get the disintegration of the euro, a chaotic collapse, something that nobody should want. The chaotic collapse of the European Central Bank.
And by the way, this is now mainstream news. You were saying this 2 years ago. They laughed. Now they're saying in the New York Times the euro may disintegrate tomorrow.
Sure. The euro could be a matter of just weeks or months. I would also point that the British pound, because of the position of the British pound.
They're saying Britain's next to fall, yeah.
That they will be sucked into this maelstrom, this whirlpool of bankruptcy and hedge fund speculation. The other thing, though, is once you get the British pound going down and the British banks, that also brings down the euro-dollar market. There's a huge mass of trillions of U.S. dollars that have been sitting in London.
Yeah, the carry trade. And London is now bigger than New York financially.
Right, so the euro-dollar market, and of course the euro-dollar is just the same as any other dollar when it comes to a market. So you've got this problem of a whole bunch of dollars that are beyond the reach of the U.S. government, and the British regulatory regime is worth nothing. The other thing is, interbank lending in Europe has now frozen. It has seized up. In other words, when you get a systemic crisis, banks will not lend to each other, and it doesn't just mean Banco Santander or Banco de Bilbao of Spain or the various Italian banks. Unicredito is one of the biggest banks in the world, and it's probably reaching up to Deutsche Bank in Germany and Barclays Bank in Britain, Societe Generale, certainly in big trouble, BNP Paribas. These are all bank stocks that have lost 6, 7, 8, 9, 10% in the past week. But if they're seizing up, that means Wall Street is seizing up too. And we have this emergency conference. You can see how scared the European leaders are. The European finance ministers are meeting in Brussels right now, and they're coming up with what they call the defense fund against the wolf pack. The wolf pack would be the hedge funds.
But the wolf pack is them. They're all chief members or former heads of the wolf pack.
More or less. But here's the idea. If you wanted to stop this, there are some things you can do. If you're under attack by hedge funds, you ban hedge funds. If the hedge funds are using credit default swaps, you ban those.
Okay, we know what they should do, but what are they saying they're going to do?
Well, they're going to come up. They came up with $150 billion for Greece, and that's now going through. And now they're going to have $645 billion. It's 500 billion euros, basically. So 650 billion US dollars to defend the euro against these hedge funds, hedge fund hyenas and zombie.
And this is, tell us where you see this going.
Well, first of all, the bailouts do not work. Austerity does not work, right? Gouging the lifeblood of the Greek people will make no difference at all in this, because that doesn't have anything to do with anything. I think you're going to see the chaotic collapse of the euro. You're going to see panic